Hi, everyone. Happy Friday and welcome to the Challenger Network. I'm Brandon Bichler, partner at Elixirr. This is our third episode of a new show where we aim to debate and discuss some of the most important stories, trends, and questions from around the business world. The topics we cover will typically have a prevailing consensus viewpoint, but on this show, we'll do everything we can to explore the alternative or the contrarian view to generate fresh ideas, creative and critical thinking. Essentially, to uncover opportunities in the spots where people aren't looking. As part of that, we'd love to hear your views and take your questions in the comments. So during and after the show, please let us know what you think or if you have a question to ask. And finally, please let us know if you have a topic you think we should cover. We'd love to hear from you. Today, I'm joined by my partner at Elixirr, Iliya Rybchin. Iliya joined Elixirr in January this year. He spent his entire career focused on disruptive innovation, new business models, and enterprise growth. He's kind of done it all in his career, from consulting to startups to a 15-year stint in industry as an operating executive for a variety of companies. We've worked together closely, particularly over the last couple of months, and I've enjoyed sparring with him on a number of topics, and I suspect that today's topic will be no different. Welcome, Iliya. How are you doing today?
I'm well. How are you?
Doing very well. Great. Well, let's get into it. So what do we want to talk about this week? Well, let's talk about the retail investing revolution as a starting point. So this revolution hit the radar for most people a few weeks ago when a group of amateur investors on the popular platform Reddit banded together to take on the short positions of multi-billion-dollar hedge funds, a real David and Goliath scenario. This had a profound effect on those hedge funds. In particular, Melvin Capital, a hedge fund at the center of the GameStop saga, lost more than $7 billion last month as a result. This event and the many more that are sure to come are not an overnight phenomenon, but the result of nearly 50 years of technological advancement, business model innovation, and regulatory change. We've seen similar consumer-driven disruption in nearly every industry, from education to healthcare, to media, to retail, and many others. This is a force that will affect nearly every business. So, Iliya, what's really driving this? What's this story about, and why has it captured everyone's attention suddenly?
Yeah, it's a great question. I think to understand what the story is about is really, we should look at what aspects of the story we think have resonated in the marketplace. Is it the fact that a hedge fund lost a lot of money? Well, I don't think that's the case, because hedge funds lose money all the time. They lose it every day. And the fact that some third-rate hedge fund got fourth-rate returns in January, I don't think is worthy of the coverage that it got. Is it that some amateur investors made some money or potentially lost some money? I don't think that's a story either, because that's a story as old as time. People have been investing and losing their life savings in the stock market for many, many years. And we all remember the internet bubble where people lost fortunes betting on internet stocks before it crashed. I think the story really is around the fact that what happened was a light was shined on the power imbalance that exists in not only this industry, but as you mentioned, in other industries. These venerated and reliable institutions that have existed for a while, people are realizing perhaps are not so special. The dark arts that are practiced by all these hedge funds to deliver incredible returns, it seems, at least as far as we could tell in the last couple of weeks, mere mortals with 8th grade arithmetic skills can figure out how a short squeeze works. And so a lot of this has started to demonstrate the fact that mere regular consumers are now able to participate in almost a level playing field with these closed and powerful and venerated institutions. We've seen this now in financial services, but as you said, we've seen this over the last few years, over the last few decades, in media, in healthcare, in retail, and in education. And I think that's what's created a lot of the discussion and outrage, is the fact that these institutions are really trying to figure out what that means for them. How do they protect themselves against this evolution and this shift that's happened? And is the only way to protect themselves through legislation and government intervention, or do they have to change their business models?
Yeah, it's super interesting. I mean, on one hand, it seems to be that a lot of these institutions were put in place, or things, were entrusted to experts in order to protect people from making mistakes, or, like you said, losing a lot of money, or really, being harmed in some way. So is there not a danger of that? Is there not a danger in some ways that pure democratization of this, consuming your information completely from corners of the internet, where your data might be, reliable, or it might not be? Isn't there some danger to that, as more people get involved, more people want to trade or do other things to participate?
Look, there's always a danger, but there's a big gap between expert and the dark corners of the internet, and I think is really where this power imbalance is coming into play. What is an expert, and how does one become an expert? Throughout most of the day, I have either CNBC or Bloomberg on the TV in the office in my house. And right now it's earnings season, and every when I have the volume up, every few minutes, what I hear is something along the lines of, company XYZ has just beat estimates, and here to talk about it is the head of research for bank ABC to offer an opinion. And sure enough, some talking head comes on who's been anointed as an expert because he or she is the head of research at some established bank. And this person goes on and talks about how this stock is going to do well next quarter, and this company is outperforming, and blah, 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 blah. And all over the world, grandmothers and college students are listening to this person and are making investment decisions based on this talking head, and are making choices. And they don't even need to look at CNBC or Bloomberg. And a lot of this is now integrated into the trading platforms. If you have, TD Ameritrade or Schwab, you can actually have the CNBC video screen right next to the buy button, and you literally can listen to this expert and hit the button. And so the question is, who determines that this expert's opinion, his or her point of view, his or her analysis is superior to that of millions of people in a chat room? I think a lot of people look at this person and say, wow, that's a really impressive person in a very fancy suit and $100,000 watch. Well, he or she must really know what they're talking about, so I'm going to hit buy. Now, obviously, that expert has some credibility, has some gravitas through years of experience, but one would argue that especially if you look at some of the discussions on the Reddit board and you read past the vitriol and kind of some of the silliness, there's actually some pretty high quality analysis that's taking place there. And that, I think, is the question: is who determines which analysis is worthy of somebody making a decision, which analysis is worthy of taking an action? And I don't know what the answer to that is, but the fact that it's no longer the exclusive territory of talking heads on major news networks and people with fancy titles, I think is what's troubling to the industry.
Yeah, you and I talked a little bit earlier about the concept of the restaurant critic, the New York Times restaurant critic, and how one person with this anointed title of restaurant critic could make a judgment about one visit to a restaurant that could seal the fate for that restaurant and the employees that work there. And we've seen that the power of that one person completely be changed, forever changed by the many critics, the crowd of critics that we have online these days. Is that a similar phenomenon that you see?
Yeah, absolutely. I think the restaurant example is a really good one because, nobody is necessarily going to lose their life savings by picking the wrong restaurant and having a bad meal. But the implications that restaurant critic has on a local economy is enormous. I mean, think about the New York Times critic. This person, just by saying a restaurant is good or bad, has the ability to make a restaurant successful and have lines out the door, or cause that restaurant to go out of business and people losing their jobs. Who determined that person, out of the millions and millions of people in the greater New York area, has a palate that is superior to everyone else and is able to, with one paragraph, change the fate of thousands of people? I don't see, Congress people holding hearings about the impact that data or that information has provided. And so what sites like Yelp and TripAdvisor and Google have done is they've provided at least a little bit of a sanity check. I think people still have to make their own personal decisions around choosing a restaurant or picking a stock or a school that they're going to go to, or a medical provider or whatnot. But now the additional information provides additional context and provides a little bit more freedom in terms of making more rational, more informed decisions, as opposed to being driven by a single individual anointed by a 100-year-old institution.
Yeah, we have a question. I'd like to take one of the questions. In fact, one just came in from Stephen. Hi, Stephen. Do you think that Wall Street will become less powerful in the next 5 years? I think that's a pretty interesting one.
Wow, talk about a multi-billion-dollar question, right?
Yeah. Right. Tell us the answer, Iliya.
Yeah, exactly, and I'm going to turn around and trade on that answer right now.
Yeah.
I don't know if Wall Street will necessarily become less powerful, but I think the power will be dispersed in other places. I mean, look, if you think about Robinhood, they've not invented anything dramatically different. The way a stock trades is still the same way it's traded for a while. They made it maybe a better user experience, made it cheaper, made it something you can do in your phone while you're standing in line at the grocery store. So they've not fundamentally disrupted anything in terms of how Wall Street and finance operates. But I think startups like that and others that are exploring and pursuing new business models are spreading the power that exists. I don't think Wall Street is going anywhere anytime soon, but I do think that new players are going to come in and make a meaningful impact to the way Wall Street operates.
Yeah, I fully agree with that. It does feel like, well, this new era of retail investing, this is not so new. This has been going on for probably 50 years. Having said that, it feels like we're at a tipping point of some kind, because it's not just the stock market anymore. It's not just stocks and ETFs. It's actually moving to many new asset classes, and actually new liquidity is being created, whether that's getting access to hedge funds, getting access to venture funds, getting access to invest in collectibles or fine arts or trade receivables. It's just really interesting how that whole market, number one, there's a plethora of startups emerging in that space. Number two, there's a lot of VC money going into those startups. And number three, we're really seeing actually some of the more institutional players also getting involved with that. Do you think that's a trend we'll see continue?
Oh, absolutely. I mean, I think there's always been a bar in terms of investments that have been available to the mass public. And then there's certain investment classes that have historically not been available, whether there's a bar in terms of minimum net worth you need in order to participate, or access has actually been a really big bar for a lot of people. And I think that's actually a big trend, is the democratization of investments, is the ability for the average person to have the same access that a high net worth or an ultra high net worth individual has, the ability to put some of your money towards a hedge fund or an alternative asset class or a collectible or something like that, that for the average consumer may not be easy to do. I think that is actually the most interesting and the most exciting aspect of this, is irrespective of what's happening with equities and the GameStop story. I think the ability for the larger population to be able to make more informed decision about asset classes that were previously unavailable to them, I think is fascinating. I think venture investing is a really interesting one. Over the last couple of decades, we've seen people becoming more active in angel investing because that's become more accessible. But even angel investing is not available to most consumers. And so now the ability for somebody to participate in early stage startups without having to be an LP in a venture fund, I think is really, really exciting and may actually be influential on how startups get funded and scale. Yeah,
so there's a lower barrier to enter. The price has been lowered constantly, and as more of this happens, the lower the price will go. There's more access to more information, as we've just talked about. The speed of transactions we haven't talked about, but that's an important aspect of it, the ease and the speed of actually transacting. And finally, the ease and access to products and services that frankly weren't even available to you and to me prior to now. And that those products and services are continuously evolving in favor of attracting more consumers. So I actually think it's going to snowball and snowball and snowball and build.
And the big one I would add to that is the availability of information. There was a time that if you were a professional trader, you needed a Bloomberg terminal because that's the only place you can get the certain analytics and the data and the news insights and whatnot. And now, I'm not saying the terminal is irrelevant. It's still a phenomenal product with phenomenal features. But now the volume of data that's available to the average consumer is unprecedented. And there was a time when, if you were a hedge funder or whatnot, you went to the SALT conference and you had your hallway conversations about different things. And I didn't get an invitation to the SALT conference. I don't know if you've ever gone, but
no, that must have got lost in the mail.
And these private parties in the Hamptons where they talk about kind of the next company that they're going to go after. All of that stuff starts to become less and less important when so much information is available and people can make their own choices to what they parse, how they act on it, and what they find relevant.
Mm. So not to sound too bold, is this just a natural progression of democracy itself? Is this just the natural next step for where we're going? And we've talked a lot about financial services today, but actually this is not a new phenomenon. As we said, we've seen this play out in so many industries. You've done so much in media. What it's done to media, I'm a musician. The way that I can actually write music, publish it on my laptop and get it distributed to all the online music stores literally within days is just phenomenal. But this is, so I think that we can conclude that, and you can help me add to this, but this is happening. You can try to regulate it, you can try to control it, but I think you used the word earlier when we were chatting, those are almost speed bumps to just slow the force that is coming, which is the consumerization and the democratization of access and the ability to do these things. And it will only increase. I talked about a snowball effect. It's happening. It's going to be hard to regulate. It's more about how do we understand it and what does it mean for how our business needs to evolve, how our society needs to evolve, how we need to respond to it rather than how we need to try to control it.
Absolutely. The big question is exactly that: is what is the response? Everyone that exists is going to have to make that decision. The businesses are going to have to make those decisions. The government agencies are going to have to make those decisions, and consumers are going to have to make that decision. But you're absolutely right. The flow of disruption is not going to slow down, and it's not going to be stopped by new regulation, and it's not going to be stopped by any sort of policies. It's going to find a way eventually to overcome all that. And we've seen that in every single industry, that the pace of disruption, the pace of innovation, the pace of kind of consumer changes far exceed anything that has been put in place to slow it down. And so companies in particular have to make the choice. Do you continue to battle and protect your existing business model and try to put up as many walls as you can to slow down this flood, this tsunami? Or do you recognize the fact that in order to survive in the future, you need new business models and you need new ways of working, and you need to adopt and ride the wave of the tsunami as opposed to try to continually stop it? What's happening in Congress this week with the hearings that are about to take place around the GameStop situation. Yes, it's wonderful that they're going to investigate it. They're going to look into it and whatnot. Whatever comes out of it at the end of the day, I don't think it's going to have any fundamental impact in terms of what we've been talking about for the last half hour. I think if anything, it might just create more incentive for people to find additional ways to keep the tsunami going.
I agree. Well, I think that's all the time we have today, so we're going to leave it there. We can certainly continue the debate and answer your questions. I know we had some other questions come through. We'll continue to engage with you in the comments after the show. I want to thank Iliya for joining me this week. It's been fascinating to hear your perspectives, Iliya. Thank you. And thanks to all of you for joining us today for Challenger Network News. We'll be back next week on Friday with another topic. Of course, if there's anything that you'd like to discuss, please put it in the comments below. We'd love to hear from you. Thanks again. Have a great weekend, everyone. See you next week.
Bye, everyone.